Mark, we've long said that these sorts of policy things seem to have very little impact on revenue on the stock in the near term. But this is a new wrinkle, having this outside board essentially force Facebook to write some rules.
And that's a good thing from both an advertiser and a user perspective. You'd like to have greater clarity on what's going to be allowed on the platform and what isn't. I think this was generally a positive event for Facebook investors because the company's decision to remove content because it undermined our democratic policies, practices, and because those comments promoted violence. Removing that and getting essentially Facebook Supreme Court to agree to that decision was positive, and then pushing back on the company and saying, now come up with real guidelines and practices that we can implement going forwards. All this is a step in the right direction. Let's policify content moderation. That'll be good for the platform. We'll start removing more of the political controversy around Facebook, and that makes it a better platform for advertisers and for users. It's a win for investors.
Mark, does this suggest a new era of spending from not just Facebook, but perhaps other social platforms on enforcement based on this renewed focus on let's have some rules, let's have some consistency from the oversight board?
I think so. I don't know how much more spend. Right now, Facebook has approximately 30,000 content moderators. So there is an increase in spend. Now, this is a company that's spending this year, an incremental 70 to 80 billion in OPEX. So this is not going to really move the needle for them. But for all this will be a harder issue for smaller platforms because they, too, are going to have to set up policies, procedures, and they're going to have to hire people to moderate content. I think it's probably a good thing. It's a safe thing. It's good for advertisers and users, for all of us to have these policies put in place. There's going to be plenty of debate around the policies, but let's get them out there. It'll be good for the ecosystem.
Maybe a good thing in the long term, Mark, but I don't see how we got any closer with this decision. But I do want to pivot to Lyft because we did get those results last night, and they did highlight a continued recovery in ride sharing. A headline this morning, though, a reminder that it's not all smooth sailing. The Biden administration is said to be blocking Trump-era regulation that would have made it easier to classify gig workers as independent contractors. And, Mark, there's also driver shortages that both Lyft and Uber are facing. And, one analyst on the call last night said that higher wages and higher rider costs, that's untenable. How does this imbalance eventually play out?
Yeah, there are three challenges here still with Lyft. I mean, rides are starting to come back. And the one data point here is that they said they had a 65% increase in rides to airports from January to April. So, we are ride sharing again. We're starting to recover, but it's still down 36% year over year. The revenue is still down, and it's still down from 2019 levels pretty materially. So it's still a long recovery. Secondly, there are these supply imbalances. I think a major issue there, frankly, is just safety. I think a lot of people are still cautious about letting strangers in their cars, and that's completely understandable. We need the vaccines to continue to roll out. And then you also need more financial incentives, but that's sort of starting to prove itself out. The average driver in some of the major cities is generating between $30 and $40 an hour driving for Lyft. So those kind of economic incentives and further vaccinations will bring that supply back in imbalance. But Lyft is going to have to also help provide more incentives there. And so will Uber, by the way. They'll talk about that tonight. And then finally, on this regulatory issue, this will probably come up again in the next several years. There was a big battle that was fought in California, and the populace of California voted pretty overwhelmingly in support of allowing gig economy employees to remain contract employees. So I don't know whether that's a harbinger for the country as a whole. My guess is that it is, but I don't think we're going to have a real key legislative decision on this for 3 or 4 years.
Shepard Smith here. Thanks for watching CNBC on YouTube.